June 22nd, 2026, we're going to look at supermicrocomputer SMCI, one of the most explosive stocks from the 2022 boom. And we're going to just talk about why I'm paying attention to it and what my forecast is for 12 months out. And let's get started. Supermicro has had one of the most dramatic financial rides in modern history. Unlike typical software companies, SMCI operates as an infrastructure and hardware provider. They spent years growing steadily as a standard server manufacturer before their liquid-cooled server architectures perfectly positioned them to capture the generative AI buildout. And all this is saying, if I could re-summarize it, is that SMCI used to create, specifically what they used to do is make infrastructure and hardware. They used to provide infrastructure and hardware. But they spent years doing that before they got into a new game. And that's before their liquid-cooled server architectures started becoming useful for what industry? For the AI build out. So as AI expands and grows, this is one of those companies that's going to grow with it, because it's not only doing the infrastructure, but it's also building liquid cooled servers, which are new and which are growing and expanding. Okay, because SMCI operates on a fiscal year, the following 8-year breakdown reflects their reported fiscal year cycles from 2018 to 2025. Okay, look at this. On the right hand of this, we have the profitability. What's the profitability in 2018? They were profitable. 19 profitable. Look up the scale as we go up to right now. Look what's happening with the company. They're not only staying profitable, but the revenue is increasing Look at this. The revenue was 3 billion in 2021. The revenue now is 21 billion. Their employees, they had 3,000 employees, 4,000 employees. They're growing to 6. This is all the signs we want to see. This is the last takeaways here that I wanted to tell you about before I actually tell you about the chart, show you the chart, show you the technicals, show you what I'm thinking. Again, for about a 6 to 12 months from now. The AI vertical lift. Between 2018 and 2022, SMCI was essentially a slow and steady hardware business, hovering between 3 billion and 5 billion in revenue. The inflection point between 2023 and 2025, where the revenue grew over 300%, this was driven by overwhelming demand for their full rack liquid-cooled servers. They're building servers that are liquid-cooled that people want to buy. And then working with who? NVIDIA. The margin compression versus volume. Interestingly, while SMCI's revenue jumped significantly from 2024 to 25, the GAAP net income slightly compressed. This highlights the competitive pressures of the hardware market, the high costs of sourcing cutting-edge components, and heavy capital investments into rapid supply chain expansion. Last thing is efficient headcount growth. I always look at employee count. You want to look at it, how a company is hiring and letting go of employees, and you want to look at that in correlation with their revenue growth and their profitability. And if you can get all of those growing at the same time, growing steadily, that's how you know you're looking at a very, very powerful company. Unlike many hyperscale software firms that triple or quadruple corporate headcount during a boom, SMCI did not. They managed its explosive financial growth with incredibly disciplined employee scale-up. They didn't hire too many people. Extremely important. They roughly doubled their headcount from 2018 to 25, maximizing the revenue generated per employee by focusing heavily on automated manufacturing footprints and direct engineering partnerships. So with that being said, let's get into the chart and talk about my plan. This is the monthly story of SMCI. Going from $2 to $3, you could even say $1, up to 122. We had, these things don't happen for no reason. Yes, a lot of that was momentum and traders taking advantage of momentum, but a lot of this was also institutional investments because they see value in the company. And you just saw the value in the company. So here's where we are right now, June 22nd. Now, you don't need to be a genius to draw lines on a chart. You don't need to be a genius to see levels of support. We have a regular level of support here based on the past 4 or 5 years. And we're also facing this cooling off period, this selling algorithm we're facing. Institutions run selling algorithms and buying algorithms, and you can see them a lot of times. Let's look at the weekly chart. The weekly chart is where I get my entries. Sometimes I use the daily chart, but I like weekly chart entries. And when do I enter? Well, if something is strong going up or strong going down, I wait for a weekly momentum shift. So, for example, if I thought this was strong to the upside, I would enter right here where the momentum tips to the upside. I wouldn't enter here. Remember, these are weekly bars. This is a weekly chart. So I would wait. Okay, now I'm entering. Okay? If I wanted to take a long in this company, I would wait, and then as soon as it tips to the upside, that's an entry. And you can apply this logic anywhere. What I do is you look at the monthly. Here's the monthly. You look at the monthly momentum and you see what's going on with it. So look at the monthly momentum on SMCI right now. Yeah, we're in the negative, yes, but look what's happening to the momentum. We're pulling up hard. What's the volume telling us? Volume is increasing. Increasing volume means people are telling the truth. It means you can trust the data. So if you're seeing momentum move to the upside on a monthly time frame, if you're seeing the volume increase while this is happening, that's a prime environment for entries on a weekly or on a daily. Okay, however you want to play it. I prefer the weekly, but you can apply the same philosophy to the daily entries. So what I'm waiting for is for a shorter term swing trade that maybe only lasts like 1 to 2 weeks. I'm waiting for this momentum to flip to the upside, and then I'll target a 1-to-1, do a short trade, not ask for anything crazy. However, in terms of the long potential here, if I was going to wait and actually take a long investment in this company and trade for a longer period of time, 4 to 12 months, maybe with like leap options or shares, doesn't matter, then you probably already know what I'm going to say. I want to see a consolidation, and then I want to see a breakout above that higher point, above this selling algorithm. I want to see a breakout, and my entry is here, right here. This is my entry for a long position. So we're saying for like a longer term swing, okay? Or just at least another opportunity to take another swing trade at this point. So my price target for 12 months from now is going to be around $60, and we will see. We shall see. See you in the next one.